All right, welcome everyone. This is Bob Maurer. It is Friday the 9th of May, around about 3:30 my time. Market's about to wrap up for the week, for the day, in about a half an hour. So we're just getting towards the tail end of this week's action, and I thought I'd do an update of the current seasonal futures spreads strategies. Now, I know I introduced these just yesterday, but we might as well just finish the thought as the week ended and take a look to see what happened today so we know how we're set up going into the weekend. Let's hop into it here. Down into the portal. You'll see the most current PDF version. Click on it. And so this will be for this upcoming week, the week of 5/11. And here's what we have as introduced yesterday. 354 bear spread in soybeans. 55 soy meal bear spread. 356 bear spread in natty gas. That got filled today. First level. 357 bull spread in live cattle. 358. That should be 358. I didn't change that yet. So 358 is the bear spread in coffee. All right, let's hop on over to the charts and see how we're looking here. One by one. First of all, soybeans. So the official start date was back on May 2 for this particular strategy, number 354, the bear spread in soybeans. This is a primarily sideways trading market. If I were to pick out the bulk of the trading, I'd say it's probably somewhere in this area. So roughly on the high side, about say 2 cents, on the low side, negative a nickel, so about a 7-cent range. That equals $350. So seasonal projects lower, a lower close by the end of this window, which is June 28th, than where it starts. It started at -3, so somewhere south of that. You can see it's already pushed down a little bit, right? -3 was the benchmark. We got down to as low as -5. First target's -6. Second target's -7. So we need this thing to see some kind of bid, catch a bid, and then break on down, basically staying within this range. All right, so no fill as of yet, and no change to the strategy. We'll see how things evolve with this one. Next one is soy meal. Similar story. We are looking to get short. This is strategy number 355. So it aligns with the soybean we just looked at. Recent trading range on this one, we'll just call it somewhere in this area, give or take, right? So a high of -230, a low of -410, so give or take. So that's about a $2 range. That's $200 range. That's what we're looking at there. And we want this thing to stay within the range. Seasonal projects a lower close by the end of the window, which is on June 26th, compared to where it started. It did have a pretty good dip out of the gate, so we'll need this thing to recover and then break on down in a matter of 6 or 7 weeks or so. So no fill as of yet on this soy meal, and no change to the strategy. Everything is moving sideways. It's actually dipping a little bit there, so kind of moving away from us. If it stays down there for the next week or two, we might have to look this trade off, but we'll just see what happens and stick with it for now. So that's soy meal. Okay, then we've got the natty gas. So this one got filled today. Let's take a look here. Bring it into focus. Okay, first entry level is 896, and we got to as high as 907 today, and then we had a nice close on the lower 20% of this trading range, so looks good at the moment. Today is Friday, though, so it might have been just a profit-taking scenario. We'll have to wait to see how trades come Monday, Tuesday, Wednesday, and see if we're on the good end of some weakness here. But that level should be filled. So level 1 traders are filled, the more aggressive average in type traders. Level 2 are not filled yet, and we have no change to this strategy. So this thing had a massive rally that lasted from about December-ish or so into early part of March, then a massive break, pretty much giving back all those gains. Now we're seeing a bounce, but hopefully what we're looking for is for the seasonal to align with a bit of a correction and then a resumption of the downtrend. All right, so the seasonal's in the driver's seat. Technicals are leaning our way, in my opinion, because we do see a pretty good downtrend over the last month and a half or so. So a little bit of a recovery bounce that we're getting on board with right now, and hopefully it breaks on down. All right, so that's that. Level 1 filled. Level 2 still sitting on the sidelines waiting. No change to the strategy. We'll see how things evolve. Then we have a bull spread live cattle. So this is strategy number 357. We're looking to buy a dip, and then hopefully this, similar to the nat gas, but obviously different directions, does something similar where it'll break and then resume the uptrend that it's been. Our levels are $1.50, and then down here at 70, with the stop down here at -30, and only one target on this one. Trade is prerogative. If anybody wants to do their own thing, then certainly feel free. Do as you wish, but that's where I have one target right now. Could be stretched for more, but that's not what I've got set up at the moment. So no fill, no change. We are sitting on the sidelines waiting for it to come our way. That's number 357, the bull spread in live cattle. And then last but not least, coffee. All right, so our entry, we're looking to get bear spread. Selling this thing. It's strategy number 358, the SEP July spread, or July SEP spread, I should say, bearish. And kind of looks like the natural gas trade, right, where we had a pretty good rally going into the first part of the year, and then a real nice break, giving back most of those gains, and then a bit of a bounce. So kind of a similar structure, right? Different markets, but similar structure. So we are looking to sell it at 9.15 or 10.15, stop at 12 even. And out of the gate, it looks like it's just shown some fairly steady weakness. There's obviously a lot of concerns about the high price of coffee when it was trading up here at, at the levels it was on the futures board, not in the spread here necessarily, but on the futures board. And the affordability factor, and then also the tariffs work their way into the equation if there's going to be any tariffs against the countries that are the major producers. So just about an affordability thing right now. And also I think there was some recovery, fundamentally speaking, in certain areas when it comes to production. So that's another thing that's helping to drive this down, actually help push it down pretty substantially, and hopefully and probably pushing it down right now. So if this one breaks into new lows, I'm probably going to call it off. It'll be harder and harder to imagine a significant rally and a significant break in a matter of just a couple weeks. So we'll see how this plays out. I'll give it a few more days. Be nice to get this 915 level and just have it rotate back down, give us some kind of gain. Even if we don't get target one and the target has to be raised, that's fine. We can still make some money there because this is definitely a mover. And that's why this margin requirement up here is $1,300, which is typically on the high side for our spreads. It's just the clearinghouse saying, hey, we need to make sure that enough people have a margin because this thing can get pretty wild, as you've seen before. I mean, basically, this is a 2.5 cent low up to a 17 cent-ish high. So we'll just call it 15 cents, and each penny in coffee is $375. So that's a pretty massive move, right? So that's why the exchange is requiring almost $1,300 just for the margin requirement on one spread. So bottom line, we're looking to get on board. No fills either level. No change to the strategy. We'll see how things evolve early next week and make a decision as to whether or not to stay with this one going forward. Okay, so that's 358. All right, so we got into the natty gas. The other ones we're waiting to get fills on. Some have already started to move in the direction of the seasonal tendency. We'll see how those plays out, but that's where we're at for now. I think there's going to be a few more spreads. Might be butterflies, actually. I know I introduced the idea. that those might be coming a couple months ago, but we might be getting to the point where I really like some of these butterflies, and I think they're aligning well with the market's moves at the moment, and they tend to be a nice calm trade in this what can be chaotic market. So we will be looking at those beginning soon. I believe I'll have one or two published, and you can take a look at them. All right, so that's that. Hope everybody's had a great trading week. I hope you got a nice weekend set up for yourselves. And I'm going to leave it there. Thanks so much for watching.